Bitcoin is something I'm getting asked a lot about these days from clients. It's in the media a lot, and I love what social media has done with the finance industry in general right now. It's like there's this big spotlight bringing various financial topics to people's attention in a way that never would have happened 3 or 4 years ago. Bitcoin is basically what the proponents will argue the modernized version or the natural evolution of what money will be. Bitcoin is decentralized. So Bitcoin is using something called blockchain technology, whereby instead of it going through one central hub, it's being verified by the millions of users that use Bitcoin all independently, and because they're all independently verifying it, you can feel assured that that transaction is secure. Major advantage to your traditional fiat currency because Bitcoin has a finite amount of supply attached to it. So in other words, when you're looking at Bitcoin, there's only 21 million Bitcoins that are ever going to be produced. Currently, right now, we're at about 19 million. Bitcoin's been around since 2009. First original Bitcoin transaction that was recorded in that blockchain technology, which think of it as this big giant digital ledger that records every transaction that ever happens with regards to Bitcoin. But that first recorded transaction was actually a guy buying a pizza. 10,000 Bitcoins to buy one pizza. So 10,000 Bitcoins in today's dollars, based on where currency or based on where Bitcoin is trading today, would be $500 million plus dollars. It's an expensive pizza. But the basic narrative behind Bitcoin is compelling. If you are someone who is living in Venezuela, as an example, and you're trying to keep your currency or keep your cash in the bolivar, which is the Venezuelan dollar, and the bolivar is continuously losing money because Venezuela went through this massive inflationary period whereby the government was just printing money like crazy as a way to try to stay afloat. At one point, they were actually measuring the bolivars not in terms of what it said on their actual bills, but they were measuring it based on the weight. So if you're in Venezuela, why would you ever keep your money in that kind of a currency, which is continuously losing value, when you could put it in Bitcoin? It's secure, it's portable, it's something that you can take with you wherever you want. It makes way more sense. So Bitcoin as a hedge against that volatility is something that has a lot of appeal to a lot of people. Now, if you're in a more established, developed country, the question is, do you trust something like blockchain technology and Bitcoin more than you trust fiat currency, or in other words, currency or cash that's backed by your own government? And the argument for using Bitcoin in lieu of cash right now runs in similar lines, in the sense that even though the US dollar or the loonie or the euro is fairly stable on a relative basis, it is actually a dilutive asset. In other words, that every year that you're leaving your money in cash, you're losing purchasing power as things become more and more expensive. Whereas Bitcoin, in its pure form, is an accretive asset. So it's an asset that, although it's hugely volatile, it is going up in value. So when you're leaving your money in Bitcoin, it actually becomes something not that is going to cause you to consistently lose money. It's something that is going to make you money over the long term. Average rate of return on Bitcoin since it first came into being in 2009 is over 200%. Now, in order to get that 200%, you're going to have to live with these massive volatility swings. 2017, Bitcoin hit 20,000 for the first time. Later on that year, it went from 20,000 all the way back down to 3,000. So huge volatility, but today you're looking at Bitcoin at 55,000. 20,000 to 3,000, back up to 55,000. It's been all over the map. So as an argument, that resonates with people. I remember a few years ago listening to a cryptocurrency convention, and someone making that argument that all of corporations should be taking any cash that they have and moving it from cash into Bitcoin. And again, the reason given was it doesn't make sense to leave it in a dilutive asset or an asset that's losing purchasing power relative to inflation, when you could be putting in something that's actually going to contribute to the bottom line of companies. And while it kind of makes sense, I kind of snickered to myself thinking, like, who on earth is going to do that? Like, I mean, at its heart, who controls companies is accountants and chief financial officers. And if you were to take a gamble and put your money in Bitcoin as a CFO of a corporation, if you're right and it goes way up, you get a pat on the back. You're not really participating in the profits of that company. But if you're wrong and that money goes down, you get fired, right? So I didn't think at the time that there was any way that that possibly was going to fly. And then this year, just a few weeks ago, you had Elon Musk kind of raise his hand and say, yeah, we'll do it. And Tesla just bought $1.5 billion worth of Bitcoin and announced that going forward that they were willing to accept Bitcoin for future purchases. So now you've got the largest company in the world at this moment in time that's saying, yeah, we're on board with that. Now it's causing a lot of people to have to take a second look at Bitcoin and say, okay, well, is this actually a legitimate asset class that we should be thinking about in terms of investing? I look at it and it has some appeal to me. I don't see it as something that it's really ever going to replace cash or fiat currency, in the sense that like it's so volatile that it really is, for me, almost useless as a legitimate form of barter or exchange. Like if you think about it, if you were going to buy a latte at Starbucks, from the time that you put your order in, stood in line and got to the front of the line, you could be paying double or half of what you thought you were going to be paying just on the basis of how much Bitcoin went up and down from that 10 minutes that you stood in line at Starbucks. Doesn't really make sense. And right now, if people are using Bitcoin to make large purchases, they actually have to purchase insurance around that Bitcoin purchase to make sure that there's not too much variability in the price they agreed upon versus when they actually settle that. So it doesn't make sense for me as a fiat currency alternative. But when you start to look at it as an inflationary hedge, that's got some potential. Right now, I put gold in every portfolio that I put together, not because I really like gold, but it is something that would be historically used to hedge against inflation. It's a hard physical asset. And so as stuff goes up and you require more purchasing power, gold, in theory, is going to offset a way to mitigate the risk of inflation running away from you. Bitcoin really, in and of itself, is a hedge against inflation. It's a hugely volatile hedge, but it is a hedge. And gold's not safe either. So if I'm looking at it as something that, hey, this could potentially offset or mitigate some of the risk that goes along with losing purchasing power, maybe as a hard physical asset, it could eventually kind of replace that piece of the portfolio. So at the end of the day, when I'm looking at Bitcoin and trying to decide whether or not this goes into clients' portfolios or not, you've got to decide, well, which category does it actually fit in? And there is a definite narrative behind Bitcoin that resonates with me. A hard inflationary based asset, there's only ever going to be 21 million Bitcoins ever produced. We're at 19 million right now. So there's a finite supply of Bitcoin that's out there that's available. There's only another 2 million that are actually going to be produced over the next 100 years. So you've got a hard cap on how much is going to be out there. As a hedge, we know right away that there's only so much that's ever going to be produced. And we know there's no other use for it. So it is something that for sure could potentially take the place of gold in the future. The major downside, and there's two to Bitcoin, or two major risks, is one, there's no barriers to entry. So if you look at Bitcoin, it's the most well-known of cryptocurrencies right now, but it's certainly not the only one. There's actually over 2,000 different cryptocurrencies that are available for you to purchase right now today. And there is no reason why they couldn't come up with another 2,000 in the next 3-4 years. The technology is there that's very easy to produce and engineer. The number 2 trending cryptocurrency on the internet right now is something called Dogecoin. Dogecoin was actually a joke currency. Snoop Dogg just put it on his latest album. Elon Musk is tweeting about it. It's the number 2 trending on social media platforms cryptocurrency, and yet the whole thing was really invented as a joke. There really isn't any reason why you couldn't just invent your own currency and potentially have it take away from Bitcoin's market share. Now, obviously, Bitcoin's got a huge advantage in that they were an early adopter, the first one out the gate. They were very, very clever in how they engineered the currency to begin with. came up with you could earn Bitcoin by mining it, by becoming sort of part of that digital ledger that verifies the Bitcoin transactions. And so it wouldn't be easy to take away the market share, but it also isn't impossible. And the second one is kind of the more important one, is that Bitcoin at its heart is a digital currency, online ledger that instantly verifies the transaction, so you can be assured that you're going to get paid, and the person has the Bitcoin to pay you. But what it does do is it is pseudo-anonymous in the sense that you know you got paid, you know where it came from, you don't know who owns it. You don't know what that transaction was actually for. So even though there's a record of the Bitcoin exchanging, sort of hands, you don't know whose hands those are. And so this means that Bitcoin has a massive appeal to people who don't want the government to know what they're doing with their wealth. It's a way to hide wealth. It's a way to do transactions that keeps them off the government's radar. I don't know what percentage of Bitcoin users are using that digital currency for nefarious reasons. I do know that percentage is not zero. If Bitcoin is going to become a more widely accepted form of exchange, you're going to have to see that anonymity disappear. It has to be regulated. And if they start to regulate Bitcoin too much, how many of the people who are now big users and own these big wallets full of Bitcoins are going to get out, are going to disappear? And my major concern is as soon as it becomes too mainstream and starts to be regulated, you're going to see the knees just cut out from underneath it. So when it comes to kind of my final thoughts on where Bitcoin is going to go and whether or not it belongs in clients' portfolios, I am, not that I'm undecided, I'm literally sitting at a 50-50 percentage as to whether or not Bitcoin goes up or goes down. I can guarantee you it's not staying where it is. It's either going to be a tale of crushing losses or huge potential gains. And so when I'm looking at that much lack of certainty around investments or that much guesswork that's going into putting something in the portfolio, I'm certainly not ready, as much as I see the potential, to take that and say, let's replace my gold position as an example and put Bitcoin in there. It's just too risky. Gold, while it is not perfect, it's established. Bitcoin's still got some ways to go before it becomes established, despite Elon Musk and Tesla and MicroStrategies and Square and some of these companies starting to adapt it. I would also say that if you're looking at it from a gambling standpoint or a speculative standpoint, it's something that when you go to put your money down on Bitcoin, you've got to keep in mind, am I willing to risk money where I've got a 50% chance that this is worth zero or pretty much nothing versus a 50% chance that it's going to go through the roof? And generally speaking, I'm not investing in companies that have a 50-50 chance. There's never a 100% chance. There's no such thing as return without some sort of risk. I, as much as I can explain what I know about Bitcoin, know that I don't know exactly how it works. And there's very, very few people out there that really do. So I would tend to look at Bitcoin right now as something that you would put very firmly in the speculative part of your portfolio. So basically you'd be saying, this is money that maybe I would have gone to Vegas and taken a weekend and put some money on the tables, but I can't go during COVID. Hey, maybe that's money that you put into Bitcoin. But if you're going to be betting on it, make sure that it's money that you know you can afford to lose. Think of it as money that you'd be willing to lose at the roulette table. I don't think it's that big of a bet that it's the equivalent of you putting money down on red 11, but it would be more along the lines of, yeah, let's put it down on black. Might do well, might lose it all. I'm good either way. If that's where you can kind of wrap your head around, this makes sense to have as a piece of my portfolio, then Bitcoin might be an interesting way that you can actually add some pop, some interest, some sizzle to your portfolio. If it doesn't fall into that, if you're not of the mindset that, I want to invest in something that you could flip a coin and it could go up or it could go down, Bitcoin holds no place in your portfolio.